Yeah, one thing that's come up a lot this week is people still asking about range trends and trends. So I figured we should cover that today again. There's been a lot of questions about those. Um, but I thought what we could start off with, and maybe someone can jump in straight away with this, is how to develop a bias from a higher time frame, daily bias. And I'm starting to develop, trying to find a way to develop mine. But I thought I'd throw it out to everyone. Is anyone else struggling to develop their higher time frame bias, or has anyone mastered that and can share with us
Yeah,
how they do it?
I'd love to jump in on this. I know we've been talking a lot about it, but this is a great topic. What I would do, and please everyone pick me apart, is I would start, let's say, with the weekly, and I would establish some trends. And so you have a trend there, so that's perfect. That solid line, and then
Start
I'd
with
move
Solana.
to
Just search. There we go.
okay, cool. Yeah, so let's make a trend, a normal trend up from the lowest distribution candle. Yeah, and yeah, perfect. Array it out. Yeah, and so we have a weekly uptrend. Okay, now potentially I'd go through like to the 3 day or something, but this example, let's go to the daily. Um, this is where it kind of gets interesting. So we have a we could potentially draw another small trend, like just on the last few days, because there's clearly been a reversal. I think this is key. And then something that you can expand on, Zach, is um, we have had a retest of that line, which was in fact retesting a backside level, and we created a range up. Then on a smaller time frame, we created a range down, and now we're creating a range back up to test something higher. So at a glance, it looks like my bias is going to be up because we're probably going to make it to the wick of that candle right there. Yeah, that's so my bias is that small little space in there when I start trading today.
Very good.
I
Um,
get a gold star.
Absolutely. Yeah, you can.
If we were still in the distribution phase of this move, if we were like 4 days ago or whatever, like last Wednesday, um, then I would have had a different bias. Like I would have, even though the weekly's up, clearly we would have been in a bearish bias. Yeah, pretty self-evident, but yeah.
Nice. Okay, so does anyone have anything that they can add to that? That they think, or anything, a different way of doing it before?
I would ask him for a follow-up question, like when would you change your bias? Now
Mm,
you have your bias, but when would you change
Yeah,
it?
so it'd be really important to see how price responds on a lower time frame to that retest. So my assumption is that price won't go straight there, but through the smaller time frames, we'll watch the ranges being formed and each one being tested. And once it gets to that level, it could push straight through it, or there's a good likelihood that it'll reject um, and the bias would change. So later in the day, the daily bias could change if the price action is moving quickly.
okay, so we essentially we've hit our we've come up, we've made a range, we've had a pullback, we've retested the hold, and now we have a range coming up. So presumably we're looking to target something up here, right? We've established maybe a target around here, which is our first one. Um, so let's say we have a daily bias today, which was bullish. At what point are we going to change our bias? For example, um, this trend, when this candle closes, this won't be arrayed to here. So the next candle essentially can still open here. And is everyone thinking we would go down first to test the trend, or we would come up and try and hit our target first?
I mean, it's not a hard close, right? Because the candle body still overlaps the trend. So this is just a breaking candle. You would need one more accumulation candle, so positive closure after today to
Yep.
actually confirm it. But then it's also sitting right at the potential hold or rejection area. So that's I had an inverse similar chat today about when to take entries because usually want to have the break, then the hard close above the trend if you're looking for a long, and then take the entry at the retest. But sometimes you get the hard close and the retest within the same candle. So now we could get something inversely here, like you get into the target and rejection around 175. It gets there, but then closes afterwards badly. So period.
I suppose the next question is, if we have a bias of where we're going, how are we going to look for our entry? Like, are we gonna go down time frames? And if so, how many time frames are we gonna go down? Or are we gonna be patient until price comes up here, and then we see what happens?
I guess it depends on your
Other
trading style, but you'd have to go down time frames. We might have been able to identify that price was going to make that move, but it would have been difficult to see from the daily.
I think the risk reward longing into going higher is always questionable. I mean, we talked in the chat a lot about hitting 180 plus eventually because there's a lot of stuff accumulating. So question would be, are you really looking for longing into getting towards 180? Sure, you can do scalps if you do 50-minute or hourly, 4-hour scalps. Yeah, but like, let's say for a serious long-term position that was like in the 160 area. Now that things are going up, if we go to 180 plus to sweep all the stuff, then would say look out for retracements, have more candles, see if something is invalidated on a higher time frame. If not, then you can maybe, yeah, exactly, and then check if there's an entry for you. Because the risk reward trying to long every percent going up from here is not my personal kind of trading. So today there was a chance on this quick wick 267 to get a greedy entry for the V-shaped recovery. But yeah, trying to do it now into the shorts that are still sitting between today's high and 175. Yeah, not my style of risk management, you know.
Yeah,
It can
totally.
pump, you know. I don't say it doesn't pump. It can go to 180 plus, 290. It's just not my kind of risk management to take longs here. So yeah, rather
Okay,
looking for
so
shorts, more in alignment with daily and 4-hour rejections coming from RSI and so on. Yeah.
so how are you forming your daily bias then, or your bias in general? Are you looking for targets, or how do you kind of pick a direction?
I mean, I talked a lot about RSI already and shared screenshots about those, and I think we have things coming up on the daily to hit something that's also in confluence with the 180 area, while the 4-hour is going into overheat, very overheated area, and also the weekly goes into its resistance. So yeah, I don't know. rather TP longs onwards, maybe look for shorts if you get good entries, and yeah, into the short sweeps, then take an SL for those shorts because the risk is infinite compared to longs, depending on your size. Very risky if you don't know how to short. And if the chart proves it wants to keep going, with small candles, then you can certainly take longs. Just thinking out loud, everybody has to know for themselves. But I'm not super pumped to take serious longs here. That was in the 160 area. That's where I did. And now it's more looking for how far does this bounce go? And take it from there.
Hmm.
So
So something I've been doing lately is just to try and look at everything through a 2 candle range. And to try and, for example, we have this move down here. So to try and understand it, we'll go to a time frame. To try and simplify everything. So we have the hold. So once we have a break here, we then have a 2 candle range, and then if we have a rejection of something, I'm just trying to focus on, is there going to be a retest, and where would the retest be? It seems something that everything that's happening seems to be, there's always a break and a retest on some direction. So if we have a 2 candle range here, I would expect a retest of this one, given a rejection of this level down here. So then my bias would have been bullish here. And then once we tested this range, the hold here, given the trend and everything at the time, would have been a raid to here. And to look for the next retest, to look for the next range, and probably on the 12-hour. Then we had a range coming up here and one here, and I would be looking to retest the hold, and then retest the hold. Something like that, I guess. It's obviously easier said than done, but trying to simplify everything just in terms of breaks and retests, and where's the range, and where's the break and the hold in each range, and where's the backside and front side. Does anyone else have a method of how they do their bias or pick a direction, and wants to kind of jump in and or has any questions? Do we have some written in the chat? Guys, feel free to unmute yourselves and just join in if you want. Or totally feel free to destroy what I'm saying. Make me look like an idiot. If you can prove me wrong, I'll switch my strategy for sure. Yeah, so just looking for the range. That's basically it. That's what I'm doing. It's
Where would you get their feedback?
Yeah, I've been thinking about it. I just think it's
okay. Is everyone still there?
Yep.
All right. So yeah, Blue, what are your thoughts on ranges then? Like when we have obviously like a ton of candles here, are you looking the same, just to kind of simplify it down to 2 candle ranges, or do you have another approach?
I printed the 4-hour example on this from this peak to this bottom in the chat earlier today, where the exactly breakup was, and the hard close outside and the retest, and that's then just something you need to, you can have set in stone TPs, sure, but I mostly go with how the chart develops over time. So I mostly took profits today on the pump 233. then hedged a bit short, so that's my kind of approaching things.
Okay.
But
I did
if you
see
have
that
like
earlier, I think. I'll
yeah,
pull that up for everyone. Can you remember roughly what time it was so I can jump to? Oh yeah,
yeah,
was this?
not so
Have a
far
look.
ago. Like what time is it? Like 7 hours ago, 6.5. So my time is not your time. So
Where are you? Where are you
yeah, it's
based?
here.
Oh yeah, I've got you. I've got it here. Yeah. Okay. Okay. Can everyone see? Can you see the Discord now?
Yep.
Okay. So Blue, this was the post, right? You're talking about.
Yeah, exactly.
Would you
Because
mind talking us through this one?
yeah. So Pawn was basically asking how does it visually look like after we talked before, how the basic principle goes. And it's an answer and a question also. I mean, we have a lot of questions about range trends, true trend, what and what not. Because Venom also asked, is that an array trend, downtrend, or is this a range trend? And I wasn't perfectly sure to answer this. So if anybody can answer, so I basically just followed with the array along the candles from the 4-hour, and this is the 4-hour downtrend that comes, shows the truth. And then you see the setup on how, there's one break, right where your mouse is at the yellow VWAP, but doesn't get a accumulation closure, so a hard closure outside. And then you have another local top in between around 182. So that's breaking, but no hard closure outside. So it follows through, going down exactly. And then eventually at the green rewap bands, there's another break, and then the first hard closure outside, and then the retests followed on the trend line. So that's like the ideal setup to take for me to take a serious position, and then see from there how the chart develops. I mean, when we were in the 160s, it was talked about a lot to go back up to 172. And higher to sweep the shorts at least. And then it's questionable from there how much power is in the pumps to get to 180 right away before going lower first. So that's why I'm like cautious about taking new longs. Yeah, it comes back down to, or falls always back to like risk management. So try to manage your risk, not your profits. And I'd be cautious to long here. I mean, it can go to 180, 990. We'll see, but not my kind of risk taking for potential profits based on that risk. So that's why I mostly TP'd here. And yeah, if you now, I don't know if I have shared RSI charts around that time frame in the chat. No, maybe up higher. Yeah.
This one here, perhaps.
Yeah. So.
Let me have a look up and find it for everyone.
Mm.
Is it a bit higher, maybe? I think this one.
Yeah, that's the weekly. So that I was saying like we have more room for upside, but weekly is, is a higher time frame. So there are a lot of 4 hours in the weekly, so it can bounce around still.
So they're
But
on the RSI. You're looking for the RSI to come back up to touch the top of that trend line.
that's at least a likely scenario given the fact that it bounced from the support, and also in the daily, that's on the other image, it bounced from the support and has room to go to 180. If you go to, I guess, the prior image on right in the chat. So that's Bitcoin, which is contesting the daily downtrend. That's
I think it was one of these
yeah.
ones.
That's Bitcoin again, but that one is at least Solana.
Oh, here we go. Yeah.
So yeah, That was before we were going higher. So because the day before I was talking about this little choke point on the RSI where we have a global resistance and yeah, local resistance almost crossing and then fucking around in between. And it's really a lot of headwinds to just rip through, especially if you get the confluence with, okay, that's a short pool right there. You also have lower time frames being very overheated. So that's when more and more things come together that a rejection is likely. I'm not so much into taking longs just because we have a quick dip to 167. Yeah, it bounced. Now we are back at 172. But yeah, it's not my kind of risk taking for profit seeking, you know.
Yeah.
So
Very good. So I'm going to jump over to. I think we have a question thread, don't we, for the live stream? And we'll jump into some questions. Let's have a look. I think we're getting more questions about range trends. What is a range trend, and how does it differ from a normal trend line? Maybe. Well, I tell you what, we can plug here. Nate, you have a fantastic indicator.
Yeah.
Sharing this with everyone, but Nate's developed a fantastic indicator, which is a really good place to start if you're new to range trends. It's going to give you every range trend on the chart, at least the two candle ones, and
it looks like a mess and it's intimidating, but it's much easier in practice. Yeah.
yeah, it's really fantastic here, and you can see. Let me just remove all of these trend lines. You can see here we have this is, as I understand it, a classic range trend, where you have a accumulation candle, two distributions, and then you have another accumulation. And that can be switched the other way around to have two accumulation in the middle and then distribution and distribution. And as I understand it from Sin, this range trend is not arrayable. So when you draw this on, this stays here. It doesn't array to anything else. It stays here, and it does not move. And very quickly, I'll show you guys an example of one. Sorry, go on, Nate.
I was just gonna say, just to be as concise as possible. That one that you just drew, it wasn't perfect, but it doesn't matter. Yeah. Yeah. Basically, what you do is you use the ones that the indicator creates, and then you just copy it on yourself, and then you can turn the indicator off.
Yeah, so that's what I've done here on this ADA chart. We have one here that starts here on the daily, this range trend, this accumulation candle. We have this accumulation candle here. We have a 2-candle range, and we have another accumulation candle. So we draw the range trend from top wick to top wick here. And that doesn't change. And you can see price comes back to it later on. Checks it here, comes up to test it here. And we have another daily one. This is the other way around. If I'm doing this wrong, somebody call me out. But I've watched Sin do this. So this is the other way around, where we have a distribution to distribution with 2 accumulation candles in the middle, a 2-candle range. So now we have our range trend here, which the fantastic indicator shows us.
The reason that it picked up that one is because the wick of the candle on the right hand side makes it into the body of the candle on the left. So that's really crucial. If you're doing them manually, if the wick doesn't make it into the body, then it's not correct. Yeah.
That's right. Good point. So that wick comes into the body of this candle. So there we can have a range trend.
And of course the bodies can be overlapping, and then it's correct, but at least the wick on the right hand side has to be into the body. Yeah.
And the difference of normal trends, very basically, and someone again call me out, is that these range trends don't change. They stay there on the chart forever. And our normal trends can be arrayed. So let me try and find, it's going to be hard. We have a, well,
Can you
let's say,
actually, sorry for interrupt. Can you actually go to the Solana chart on the 4-hour to
Mm.
how do you array that? Because that was also a question today, and I was myself not sure how to answer from the peak of the 205 hit, because you have like, I mean, accumulation candles one after the other, and then you get your first distribution, then 2 more accumulation, 1 distribution, 2 more accumulation, 1 distribution, then eventually tops. So how do you array that for a range trend? Because looks like it's going very steep upwards then, which can be valid, but how does that help for longs, for long entries if you try to range trend at top like that?
yeah, that's a good point. So for the normal trends, Sin always starts on the higher time frame, right? So he's always starting on a monthly or a weekly, and then working back from that. And why that's important is because the peak that we're starting on may be a sweep, and it may not be the actual pivot point that we're going to use. And I think we only know that if we start on a higher time frame and array down. And there's, if you watch Will's YouTube video, Sin's YouTube video, he's already done videos on this, range trends and trends on YouTube, where you can see how he arrays the trends and how he starts, like how he arrays that over to here, and then up to this one, for example. And he arrays those. That's going to do a much better job than what I could do. But if we were starting here, I don't know how basic to be. Like everyone knows, if the candle doesn't hard close the trend, then that's not an arrayed trend point. So this one can go to here, but it cannot go to here because this has not hard closed the trend. So you can't do that.
But to be a range trend anyways, you would need 2 accumulation candles, and this is only 1, right? So this is just a normal range trend or array, but not
this would
a range trend. No.
this would just be drawing a normal trend, and then obviously the range trends are just the two range candles. So we have one, for example, as I understand it, like there to there is a range trend. The accumulation candle to the accumulation candle. It looks like price respects it there, and then later on again there.
So you can't actually have one on this peak range trend from the
The other,
295.
If I'm not mistaken, do we see one on like the weekly, or is there one on like the monthly or something?
I
No,
believe
hey? Okay.
we have this. These are the left behind range trends, where you have
Oh yeah,
a
that's what it
valley.
is. Yeah, exactly. And so
Um,
that's a different set of rules. It's very much the same as a normal range trend. But if a candle is part of a movement and it's at the base of it and it never gets retested, then the next time a candle of the same color comes into it, regardless of what's happened in the middle, you can make a range trend. And this is not an arrayable one. This is a range trend also. Yeah.
that's very good. Yeah. So here, for example, this hold level is not tested. Price never comes up to it. So when we come back to it, we can array. We can make a range trend from here to here, and then that one doesn't move. That is our fixed range trend, and the normal trend would be here, here, and then here. So the normal trend looks like it would end up back where the range trend is anyway.
Yeah,
So we
this is
array
an
it.
interesting example actually, because that's rare that that happens. But yeah,
And then the other thing Will says is that you can start on a monthly and you can go down to the daily next, but you can't go from a monthly to a weekly. You can start on a weekly and you can go down to the daily, but the weekly and the monthly aren't compatible. So it's monthly to daily or weekly to daily when you go to your next time frame.
Yeah, that makes sense because they don't share a common denominator for rollovers, monthly and weekly.
So if someone else wants to help me out here in terms of the trend, as I understand it from Sin and his videos, if we had a normal trend here, we would array it to this candle. So this hard closes, we come up to here. This hard closes, we come up to here. And then we go from the monthly down to the daily. And then let me just get rid of that one. Now on the daily, we take our pivot point, which is going to be shown here. And we only can move forward in time. We can't go back. So if there were candles, sorry about that. If there's candles coming up here, we can't go back in time. Our pivot point is here, so we can't come up to here. We can only go forward. And on the daily, there's no hard close. So we can't do that. It just stays here. And then we array our trend from that.
Why is it this one and not the upper one?
This one?
Yeah.
Again, I think Sin covers this in his YouTube video, but because this candle, when we come down to our daily, this candle has not hard closed over the trend line. So this, I think this is just a trend line liquidity sweep up and down. So because we can't array that to here, starting on the first available candle, which is this one.
and so
Okay, so
when
in
you
the
draw
monthly context, that's sorry. Go ahead.
yeah, and so when you're arraying the next trend line, the steeper one, like the local one, you're going to prioritize using a candle where the existing trend line is. You want to branch off that existing trend line as opposed to using the highest point.
Mm-hmm.
Okay.
Yeah, so there we go.
Yeah. Okay.
And
Cool.
on this time frame, we don't have any range. Well, we can use our lovely indicator. We don't have any new range trends created here until this point.
Yeah, so this is a local uptrend in a actual downtrend, right? So after all.
Yeah.
If we come down to our 4 hour, as you were using blue. So let me get rid of that one. So this is our trend. Now, again, I may be wrong here, so watch Sin stuff, but here we can array, this is our pivot point from the monthly. So on the daily, we couldn't array it, but on the 4 hour, we can now array the trend because we have hard closes over it. So the first one is here, this candle here. So we can array our trend. Can come up to here. And then once that is arrayed, there's no other hard close. So that stays here. I wish Sin was here because he could double check that that's right.
Yeah, you're correct.
Yeah, okay. Good. And then, yeah, we just pop on our range trend indicator and we have a ton of range trends, as you can see. And I guess we can just find ones that are going to be relevant to current price. And you can see we have a lot less down here. Here's one here. Accumulation wick to accumulation.
So the range trend indicator already shows what I was asking and suggesting earlier, that you can't really range trend draw the peak to find longs you would need for normal downtrend arraying.
Yeah.
Because that
Yeah,
confused me when I'm also asked that, and I was trying. There's no viable way to make a useful range trend there. That's not pointing like 45 degrees up.
Right.
But
no,
Exactly.
for long, you know.
no candle comes up. Here we have the valley, and no candle comes up to this hold level, this resistance candle. So
Mm.
this wick would need to come up into this candle, and then you could have your range trend. Because the wick doesn't come up into the body of the candle you want to start with, then you can't have a range trend. And then there's no range here on this time frame anyway, because we'd have to have a yellow candle here, and we could draw it from wick to wick.
So you need to hit the hold level actually. See, that's
Yeah.
even if I watched the videos, I didn't get that point. I thought you would just need to accumulation or distribution candles.
Yeah, it's got to hit the
Changing.
hold.
Okay.
So yeah, there's just no range trend here. We obviously have one on the daily from here to here. And yeah, for our trend, we would array this one, and then this one down to here, and then obviously if we get a close today, we'll be here.
Yeah. So then, to follow up on longs for this drawing, longing here is personally nonsense. But if you get the break up and the retest and then see more candles and see how the chart develops, then yeah, sure, then you can also try to take new longs. But now you're trying to long into resistance without knowing what comes afterwards. So yeah. Again,
That's a great
personal
point.
preference, but I mean, you can YOLO here and then see if it runs to 240 as some targets suggest eventually. But yeah, I don't know. I always feel like, yeah, looking at IH at anyways for 4 years and also just a bit in the FIP lab already, most people try to manage their profits and not their risk. So I can only repeat that over and over again, that it is a marathon and not a sprint. So try to keep what you gained and not risk it on being too greedy for FOMO or reasons to miss the next pump, because there will be more dumps and pumps nonstop.
Yeah, that's really great advice. Yeah. I wish I listened to that before.
We have another question about range trends, which is when range trends are touched and rejected off, do they hold the same strength next time they're hit, or do they have a higher chance of being pushed through? I remember Sin saying that you can always expect it hits it the first time, you can always expect to bounce off the range trend. So we know we have at least one touch that we can work through. But just to show you guys quickly my ADA example here, which may answer that question. This is the daily range trend drawn. This was back in the end of June. And we obviously got a touch here. And then it seems to me like price is respecting that again here.
And that's a
And
pattern
range trends do.
that I see over and over, where range trends they'll be respected at times later. But perhaps it's unpredictable, or if there's some system to it, I haven't figured out what it is. Yeah.
So
Do they lose?
it
Would
does
you
seem
say that they lose strength? Like, is that a fair estimation? I don't know. It's hard to say. Yeah.
I've looked at this too. They seem to lose strength, but then they can also regain strength too, and that's why they last and exist forever. I don't know if there's a way to predict when it's going to either support or reject price further into the future, but they do exist forever, like forever, forever. I've watched them, and price will eventually come back and touch them weeks later, months later, and respect it. So I don't know the system either. If there's a way to predict when it's gonna continue to reject or support price, but they do still impact price a long, long time afterwards. So that's why they stay on the chart forever.
Yeah, yeah. Awesome. And maybe we'll understand it better one day. Yeah.
I mean, if this range trend is the weekly for Cardano, there's a range trend that's starting here in October of 2022, and it looks like on the weekly it gets respected all the way to kind of this last month. I don't know if how easy that's to see on everyone's screen.
Yeah, no, I can see it. Yeah,
It's here.
that's amazing.
It comes all the way through.
I think that's where the indicator is most valuable. You can just on the higher time frames immediately see if you've missed any because they become very significant, especially if you wanted to skillfully buy spot or something like that. Yeah.
And
Yeah.
you can see also in the left bumps in the middle before this pump, the two humps. There are many lines crossing to the left, the two. Yeah. There are a lot of lines like crossing, which gives confluence to actually short or TP longs, so that's pretty good. Yeah.
Yeah.
I noticed that with range trends, at least only with range trends, that if you can find a space in the chart, price has kind of room to fall down. Obviously, we have to have our break and hold levels, but Blue just said there is a great here. It's just it seems like this web of range trends. I mean, this is only on the weekly, so you can only imagine if you add the daily and 12-hour range trends in as well, how many there would be kind of up here. But yeah, it's a great indicator, man. You did a great job, and it really shows you the space in the chart, and just as a quick glance to see if you've missed any.
Yeah, I just like it for just so I see the ones I missed. Yeah, exactly. Someone mentioned something in the chat. Just remember that when the range trends are horizontal, they are more parallel with the break levels. You want to expand on that a bit, Joy Boy?
Yeah, so when the range trends are, what is it, horizontals? Just remember, range trends are horizontal and more parallel with the break levels. Yeah, because so it's adding an extra confluence to the break level, I think. Is that correct? We essentially have a break level and a range trend.
Yeah, totally accurate. Yeah, if that's what he means. Yeah.
Yeah,
and he's right. Like you'll be seeing break levels, and they're all acting as support in that case.
Yeah, I wish I could find a quick example of that.
I wrote down a range trend question also.
Does everyone get range trends? It's something I'm still learning, and Sin put a really good video on his YouTube channel of it. But essentially, we're looking for 2 candle ranges, 2 up candles. For example, here. Then we're drawing the range trend from the distribution candle to distribution candle. The wick has to go into the body. So that's our range trend here on the back, on the bottom side. And then the other way we draw range trends is when there's a valley. Let's see if we've got one here. So as I presume, we have this hold candle, this accumulation candle here, and then nothing comes into that until this candle. So I believe we have a range trend there. which is possibly what this rejected off. So we have to have a valley, and then it's I think Sin calls them left behind candles. It's candles left behind, and nothing comes up into the hold into this level until this one on the other side of the valley. Nate, yeah, what was your range trend one?
Let's catch up with these most recent comments. How do you guys interpret what occurs when a trend gets arrayed so far that it goes above 90 degrees? Should it be valued in a different capacity, or should you seek a new trend line?
Oh yeah, that's a good one.
Joy Boy mentioned you start drawing interior trends. Does if a trend line is beyond 90, like, yeah, are we gonna suppose we'd be expecting, like, you'd be expecting that you'd start drawing like a new trend line, like you'd have a new trend forming maybe. I don't know if that answers the question though.
One thing Sin always says is that you need you're looking for 5 arrays of the trend before you change direction. So we have 1, 2, 3, 4, 5. So here we have 5 arrays of the trend, and then we're moving from distribution to accumulation here. As the
So
trend,
if you keep drawing that up, say you go above 90, that might be an accurate trend, but we wouldn't want to use it. Like, we would have wanted to create one from the lowest distribution of that upward push. Is that safe to say?
this is also our range trend, I think, of this. And I have
fair.
Sin put these on his chart. I guess if we keep arraying it, we get to here, and then to here. So I think I just presume after 5 arrays here, once we get past 90, we're starting to. I have Sin put these on his chart. I presume now we're moving from distribution to accumulation. So yeah, like you said, Nate, we'd be looking at our trend instead.
Yeah, and if the trend, I guess once it goes past 90, it stands to reason that it would become a resistance trend if it was a support trend before. Is that right?
Yeah, let's see if we can find a good example. Let's come to our weekly maybe. Just got to check these very carefully to see. That one is touching on the corner, so that would come to here. I think Sin's gone over this a million times, but this is 5 arrays. This is 1, 2, 3, 4, 5. So we've arrayed this 5 times, and now we're moving from distribution into accumulation here. And yeah, we just keep arraying this one, which is painful. I apologize. Okay, good. This is that one comes to here. How far are we away from 90 degrees? Okay, we're getting closer. There. Oh my goodness. They can't be touching. Yeah, there. That one looks like it's touching. Oh my goodness, look at that. It's not touching. That would be so easy to make that mistake. Can you see that?
Yeah, that's wild. That's wild. Yeah.
That's brutal. That would be so easy to make that mistake. I mean, I must have done that probably a million times. Maybe I've already made a mistake arraying this, but
Yeah, thanks,
comes up to
Evan,
this
for
one.
posting that. That is, I love that video. I learned a lot from that.
And then this one comes to here. Just make sure I got that right. That goes to here, goes to here, goes to here. Yeah, so we are, we're still not at 90, are we? Guess that comes up to here, and that's the last time you can array it. I guess when we get to 90 degrees, we're going sideways, right? I mean, what does that look like on the monthly? I mean, I guess this is sideways. We're just moving sideways now on Solana. I mean, it's just.
So if Solana goes to 1,000, we could draw that trend up to the new wick, right? You can imagine. When, I should say when, right, guys?
Start like this.
Yeah, yeah. So
I mean,
would
would make
any of
sense
the-
though, right? Because you'd have. I mean, this isn't correct, but you'd have like this kind of shape, this kind of, you know, this like kind of channel. It's pretty common.
Yeah.
Oh yeah, guys, we are early.
Yeah. Let's look ahead into the 2030s.
And then in hindsight, look at this giant distribution.
This is like looking at Solana in space. Like this is a galaxy. It's one of many. We're coming up here.
So many people losing money in that thing right there.
Yeah, that's wild, isn't it? This is people's lives, their hopes and dreams, their success and their failure,
Yeah.
just summarized in a few candles. Brutal.
Okay, I have a range train question before we move on. Sorry, 1 sec. Yeah, I bet somebody in here will know, like, really clearly what to do in this situation. But suppose you draw a daily range trend. And
Anywhere in particular, or just maybe like this
anywhere
one?
is fine. Yeah. Now zoom into, go on like the 5-minute chart, if you would. And so the relationship that the current price has, like if you were to zoom to say the 4-hour, like are we, if you look to the right hand side, we're above that range trend?
Yep.
Okay, so this might be a tough example, but if you go to the 4-hour,
Yep.
we're still above it. Okay. In some cases, you'll see that the relationship with price it'll, like for example, you might look on the 4-hour and price is just like right under the trend. And then when you change time frames, the same range trend will be very far from price. And does anyone know, like, if you draw a range trend on a daily, would it be disregarded on a lower time frame if you're seeing like a level of inaccuracy? It appears to me that if you have a daily range trend, say it comes down to a candle closing above or below, a 5-minute hard closing a daily range trend is not that significant. But you might want to decide, if you're taking a scalp, how to respond to price at that time based on this daily range trend, if that makes sense. I don't know if everyone is
I guess if it's a daily range trend, we're looking for the daily candle to influence us, I presume. And on the lower time frames, we can kind of go up and down each side of it. But if it's a daily range trend, we need to see a daily candle close to tell us.
Okay, so if you go back to the 5-minute chart, and let's imagine, zoom in on that, and imagine we're scalping, right? And so if we get that, hard close on the 5-minute below this, I know that in a global sense, it wouldn't apply to the daily range trend rules, but on this time frame, is that a significant move? The same way it would be if we drew a 5-minute range trend.
I see. So you're saying if we have a 5-minute candle that hard closes under this daily range trend,
Yeah,
is that significant?
Is it significant on the 5-minute? I realize, I understand it's not for in the sense of the daily.
Mm.
Oh yeah, this is great. So Joy Boy says significant as first touch, but not for closing. Okay, that's good. Yeah, that's good.
So essentially, we can come under it and we can bounce off of it. It does if it closes a 5-minute candle under, it's not significant. It can use it to bounce down and come back up, or vice versa.
Yeah.
It's obviously reacting to it, isn't it? It's bouncing up and down each side of it.
And you can see that the resolution is like even wider. Like you can tell that the daily is like a fuzzier level.
It's almost like having a kind of EMA here, isn't it? Really, like a kind of real-time EMA or something. It's just kind of meandering each side of it.
I
Yeah,
mean,
clearly
what's for certain is a 5-minute or 50-minute or whatever can't break a daily. So you can only have breaks and hard closes in self-referential timeframes. It can be a teaser, yeah. It can help for entry precision also, but not for telling, if it's actually broken or.
That's right. Yeah, that's accurate. We wouldn't expect any 5-minute closures to make a difference. Yeah.
I guess
Also not a
for
4-hour
confluence,
on a daily. Sorry.
for confluence of a move, right? We could, for example, we have our daily range trend coming through here, and now I've come to the hourly. And with the help of this lovely indicator, I've identified an hourly range trend here. The distribution has an accumulation range, and then the distribution the other side coming into the body. So I've identified that on the hourly. So then if we come back to your idea of the 5-minute, and this may be absolute rubbish, but perhaps the added confluence is the daily and the 1 hour here. Perhaps with whatever other level or whatever other analysis you have. Perhaps this adds an extra level of confluence to it.
And that's sort of how I've been using it. And you could see when it wicked into that level, there would have been a short scalp afterward. You would have used perhaps other entry indicators in Confluence as well, but I have been doing that, and yeah, it's like I'm not sure if I'm using it correctly. We should draw a vertical on the candle after the trend is created, so we can start measuring from there.
Sorry, what was that one? We should draw a vertical on the candle after the trend is created. Vertical. So, oh, I see what he means.
Oh, that's smart. Oh, that's really smart. Yeah. Good idea.
Do you mean the daily or the hourly? Which one? Come back to the hourly. Is it a vertical from the daily candle or the where it originated? Yeah, okay. So we'd know that's the start of the hourly. And then obviously the daily is started down here. So we
Yeah,
have
and
our
on that
hourly.
hourly, draw the right hand side candle.
This is Tuesday at 11 o'clock at night, and this is Wednesday at 2 o'clock in the morning. So let's come down our time frames.
He said not this one, but the one after the trend is created.
So the hourly starts, I guess, here, somewhere in here, and then although this does look a bit odd. That is 11 o'clock here. Yeah, I guess it's just the wick, isn't it? So this is the wick of that hourly candle, and then it comes up. Yeah, okay. I mean, I don't know. I guess it's just an added, like here it's just added resistance. It's just added like a confluence that you could use.
Yeah, it appears to be. Yeah.
Like if you put on the range trend indicator, and we come back to that area, we could probably find areas where there's a lot of range trends coming through, as we said earlier, that add confluence. And I guess we have other levels in here as well. But yeah, I think from what we said earlier, the range trends staying on especially the higher time frame ones, staying on the chart, the multiple use, they seem to get hit over and over again, and you can get hit, hours or days later.
The Sin has mentioned that they also have a really high probability of being retested. That's just something else to add.
Yes.
You'll see weeks, months, years later, if there's a big dump or a crash that nobody sees coming, that kind of a move, they usually go back and retest a range trend. It's quite common.
Yeah, fascinating. The thing about range trends, I don't know if someone can answer this, but is it visually? Very often, it's visually creating the range. I think in Sin's YouTube video, there was a really good example of that, and I saw one on, I think it was on the Nasdaq, where we have. Let me just make sure I'm getting this right. It was a bit of a lower time frame, the 4 hour perhaps, where it actually like a range is created and price just goes like here somewhere I found a range trend and price just goes like up and down either side of the range trend, all
It's
the
a
way.
channel.
Yeah, like a channel, like some kind of regression channel. Yeah, and it originates from a range trend. I can't
You
remember
can
where
see
it
that
was,
one.
but
There was one there on that time frame.
yeah, somewhere in here maybe. I mean, I know we're getting hard closes of it, but especially in Sin's YouTube video, that it really looks like it creates that channel, and I wonder, is that just because it doesn't hard close the range, like it just goes up and down each side of it, or I wonder how that's actually physically happening. We can get I guess here we maybe have a range trend, and then we have the actual trend as well, acting as support or resistance to it. Clearly, the daily is creating some kind of channel up here, getting that bounce off the support, and again, and it's creating that kind of regression channel type move. But does anyone know why that's happening? Like, is there a specific reason other than just bouncing off whatever levels are there?
I mean, if we just had the 4 hour example, I had that array downtrend, and the first hard closure is actually the little peak in the middle of where we are. So yeah, basically there. And on the 5th of August, the green accumulation candle, which makes the first little peak. on the 5th of August. To the left.
Yeah, here we are. This one here.
This is the first hard closure accumulation candle of the 4-hour rate downtrend from what I've posted in the chat. And then you have the retest of that set downtrend on that valley. Yeah. And that's where the entry was, at least for me. So
You entered down here or after
Yeah.
the retest and then back?
no, the
So here.
retests were all those candles, they were tap dancing along that downtrend. Yeah. But the first hard closure was the larger accumulation candle where your second echo sits at. Yeah, exactly. So
Yeah, I see. Okay, nice.
at least that's how it worked for me. So
Let me just label that one. Okay, yeah. So perhaps there's range trends in here as well on a lower time frame that is making a channel across here, and I guess if range trends get respected constantly, then price can always bounce in and out of the range trends. We'll make some kind of channel coming up here now. I guess it will have to, unless it vertically goes up. Yeah, does anyone else have any thoughts on range trends or trends in general?
I have a question about them myself posted. How you guys do? Maybe we answered it already. But the second question is like from the live stream question pool. So if you have like a daily array, maybe you can just pull up the question. I guess that's easier.
Yes, where was
draw
it?
it out there in the
was it?
question collection
yeah.
thing.
Let me find that one.
Yeah, this one above the second.
Yeah, here we go.
This one, because I've drawn it out. Because as you can see, I wrote a label on the daily trend. But if you then go into the 4-hour, technically the anchor would be on the one where the arrow with the 2 is pointing at, because that's a weak low of the daily. So I was wondering how you guys doing about it, or if there's also a rule, because I mean, I leave it as the daily, but if you scale in the 4-hour, obviously it's
This
a
was
little
on
bit more
Solana.
steeper to the upside than the 4-hour would suggest,
I guess because this is a range trend on the daily. It's also the trend, right? It's both.
Yeah, probably. But I mean, what do you do about the anchoring, because technically that wick where the arrow of the 2 is pointing at
Mhm.
is also actually the daily, the last 4-hour candle within that daily. So somehow it gets weirdly displaced. I mean, you should be able to draw it out yourself if you make that daily trend
Yeah.
and then zoom into the 4-hour.
So this is the daily range trend and the trend.
Exactly.
Then on the
And if you look at the
4-hour.
so it's the
Again,
same for you.
this, as I understand it, when we array from the daily to the 4-hour, this candle would have to be a hard close. Sorry, the blue candle would have to be a hard close under the trend, and then you could
No,
array.
I don't mean. Sorry, maybe I explained it wrong. I don't mean what should happen to trigger something, just for the array itself. You have drawn out the daily, but if you go into the 4-hour, the anchor
I see.
is
Yeah.
is displaced. It's not like on the wick low where I would suggest it should be.
So what you're saying is on the 4-hour, do we just do this?
Yeah, exactly. So what are you guys doing? I'm basically asking if you
That's
have.
That's a good question. I don't know.
I can
Yeah, please.
answer that one if you like. Yeah, you don't array it blue on that time frame. You can't, because like I'm sorry, I'm not sure who's posting here. Zach, is it?
Hmm.
Yeah, like he said, you can't, because there hasn't been a hard close below that line on the lower time frame, you can't actually array it any lower. So you can't move it to that wick on that time frame. But if you were to drop, say, another time frame or two and find other candles on a lower time frame that had hard closed lower than the trend, then you could array it on those time frames, and that would keep your accuracy. But you can't move the trend on the 4 hour because you don't have a candle that's hard close below it. The 4 hour.
Ah, okay. So if we dial into the 1 hour, let's say, we would pivot the anchor. Would that still act as the daily we've initially
Now
arrayed, or is that? But then it's an
that
hourly range.
that would
It
only
would
go
be,
for the trend, right? Not the range trend doesn't move at all.
that's
This would
correct.
only
Yeah.
this would only be for the
Oh,
trend.
okay. So now the things come together. Okay.
And
All right. Thanks.
and would
The
you like
normal
for
trend, oh, sorry. The normal trend would be the date, it would be, you would classify it as the daily trend refined to the 1 hour. If you were
Yeah.
to move it here and make it accurate. Yeah.
Okay.
We
Yeah,
move it
fair enough.
down.
Now this makes sense.
and
We
would it
flatten
make
out.
sense to always go as low as you can go in time frames, find hard close candles, and array it more and more specifically? Is that the correct thing to do?
You can, but then you would want to be trading on those time frames because you're looking for the most accuracy you can have for the time frame that you're trading on. So you wouldn't
that's
want to
right.
like go down to the 1 minute and dial it right in and then go back up to the 4 hour and take trades on the 4 hour. That would be kind of weird, I think.
Yeah, perfect. But if you happen to be on the 15, continue to move it to any hard close candle on the 15.
Yep. If you want it as accurate as possible on the time frame you're on, yeah, that's why you time array this stuff.
Yeah, perfect.
So interestingly here, guys, you can see this is our daily range trend, and then this is our arrayed daily trend to the 1 hour, and then you can see how we come in between. Obviously, we have other levels, but we come in between those two trends.
Yeah, because they both exist. Like, you
So
know
then
what I mean? They are actually separate trends. Yeah.
I presume as well, then we could bring our 15-minute down to this one here. And then we have we have the daily range trend, we have the daily arrayed to the hourly, and then we have that arrayed to the 15-minute.
Yeah, but you wouldn't still have you wouldn't have the higher time frame normal trend shown on here. You would remove it if you were going to
Get rid
trade
of
on the 15-minute. Yeah,
Yeah.
because the 15-minute, the trend array, the daily arrayed to the 15-minute is the most accurate on this time frame for the normal trend.
And then we should say to everyone as well that when you array the trend, the anchor point doesn't change. This, even though it looks odd, this just stays here.
Yeah, that's correct.
So yeah, so you just move the pivot point here. Yeah, and then the range trend stays.
Correct.
And typically, guys, for the people that are using range trends, what time frame are you typically finding range trends are most useful, and how many time frames range trends do you draw on? Do you have 4 hours, 1 hours, dailies, or do you just focus on one time frame?
I'll just comment because nobody jumped in. If you can find range trends on higher time frames, especially the pure ones, higher time frames than the time frames that you're trading on, then you can, that's just another form of establishing bias, and you can take trades within those, if you know what I mean.
Yeah.
Yep, that works quite well. It's just like taking say a fib move that's active on a higher time frame and trading within that bias on a lower time frame. It's exactly the same thing. It works quite well. But then I also draw the range trends on the current time frame that I'm trading on, just because it gives you your structure on that time frame, right? So if you're trying to monitor how price action is developing.
Could you give us an example of what you might do? Would you start on the daily or the 4 hour or the weekly?
Yeah, just like I haven't done this in a while, but yeah, you could well, you start by figuring out how much time you have, like Sindot would say that, figuring out how much time you want to be in a trade. So you probably wouldn't want to take anything too much beyond the 1 hour, not even the 4 hour really, if you're trying to like trade within a day. Say you have 8 hours or something. So um, it would be much more convenient to take, say, a 15-minute trade if you could get the swing, the difference in the depending on your leverage, get the profit that you want. So, say you're going to take a 15-minute trade, jump onto the 1 hour or the 4 hour, and find range trends that may or may not be there. And if there are some in place, then you could probably use those to determine your bias for the 15-minute trade. Yeah.
Mm,
Does that,
yeah,
does that answer your question?
yeah, that's very good.
Yeah.
Yeah, that's a good point as well, and that goes to what Joy Boy says. He says he likes to look at what time frames are closing first as well, higher time frame down to lower time frame. Yeah, it makes sense, doesn't it? How much time do you want to be in the trade? It's not necessarily, if you're wanting to do a shorter trade, then having your weekly or daily levels may not be useful, perhaps.
Correct. Yeah. If you're setting up your kill box or whatever you want to call it on the monthly, and you're only taking a 15-minute scalp, it's pointless. Like it's almost irrelevant, to be totally honest. Like, yes, it's good to establish bias, but you wouldn't go and check like the 45-day move that's in place to take a 15-minute trade. Like it's you should, I guess, because that's if you can find the highest time frame bias that's in place and trade with that does improve your odds. The probabilities are generally the highest if you do that. So that is the best way to do it. But yeah, within reason, I guess I would recommend.
So let's say you wanted to take a trade on the 15-minute. Would you start on the 4 hour or the hourly?
Myself, I would I would be looking at daily, 2 day, 3 day, maybe up to a week, and see what that all looks like first.
Mm-hmm.
And I tend to establish my bias by evaluating what's going on multiple time frames. And like without getting too critical, just have a look and see what moves are in place, what's active, what's yet to trigger. See if you can establish sort of a cumulative bias, and then I would probably jump onto the daily and draw some structure, like see what that looks like, and then drop down into the 4 hour, 1 hour, 15-minute. And even that setup might be a little too much. Like, depending on your strategy, you wouldn't even have to go into that much depth if you had something that, say, like a fib, an engulfed fib move. They're pretty reliable, like 98% efficient, so or successful. So you don't have to really go that overkill on the sort of the supporting TA to get one of those to work out, I guess is kind of what I'm saying. Like that's the proper process to go through if you really want to analyze the hell out of it. Um, but yeah, if you were taking a 15-minute, short version of my answer, I guess, starting on the 1 day and working down is more than sufficient.
Okay, so for example, now I just very quick. I start on the daily, come down. We're now on the 4 hour. We have a trend. We have for me, we have a target. Be up here. Something up here, and I guess we haven't hard closed the trend yet. Typically, what do people do? People put any more weight into? You putting more weight on the trend, on the range trend? Are you putting more weight on the hold or the break level? Like, what are people looking for? Are they, for example, like if you have a trend and a range trend, does one of those have more significance?
So to me, horizontals always outweigh diagonals. All
Yeah, I
throughout trading
totally
ever
agree.
since. So same principle here, because that's as raw as direct price goes, and algos are mostly like, reacting to engulfing candles, also closures, bodies always more important than wicks. That's goes a lot into this. Why, in my opinion, at least, horizontals are much more important than diagonals. But you don't get trend changes from horizontals, so that's where trends are or diagonals are, helping to find when price shifts or is about to shift in direction.
Further to Blue's comments, like you asked, how you would start, I would start very similar to the way that Sindot does stuff. Establish your breaks, establish your holds, establish trends, probably in that order, and then see what it looks like. If you have holds that have been hit or not hit, you can kind of determine from just looking at all that and identifying those levels. You can, if you can just identify those, you can generally piece it together and figure out where price has come from and where it's moving to next. With obviously there's a chance that it doesn't do what you think it's going to do, but that does give you a pretty good picture fairly quickly without doing a whole bunch of really in-depth analysis. You can get a really good feel for what is happening right in that local area.
Then, so obviously for each range, 2-candle range, we're going to have a break level and a hold level, which give us our horizontals. If I'm correct here, we have a range here. Now on the 4-hour, that's just one distribution candle, which I guess came to test this. Now on the 3-hour, I get a 2-candle distribution range, but can I go from 4 hours to 3 hours?
You can, but I'm not understanding your question. Like you have a range trend on the 4-hour, or sorry, that's the 3. You have a range trend on the 3. Is that what you're asking about? The 3-hour range trend?
Yeah. So obviously on the 4-hour, we just have one distribution candle here.
Yeah.
And if I want
that
to
doesn't work.
find my 2-candle range, I go to the 3-hour, and that gives me a break level of that range.
Yep.
So I guess my first question is, can I go from 4-hour to 3-hour, or do I go from 4-hour to 2-hour, or 4-hour to 1-hour?
I think it just depends on what you're trying to accomplish. And I'm not really sure what you're trying to accomplish yet.
Well, we were talking about horizontal levels, and
Okay.
obviously if we're in our range here, we obviously
Oh, I
have
see what
our break level. So I have my higher time frame horizontal marked up here, but obviously we don't we're not going to hard close this range trend here yet. Sorry, we're not going to hard close the break level. So that puts me in a big dilemma, as in, do I take a long up here and it's going to bungee back down, or do I wait for a hard close of that, in which case, I'm already going to be at my target?
Back to the two base principles, breaks and holds are always self-referential and can be teased on timeframes lower. And that brings you to how greedy and how you do about your risk management in taking those trades. Because if you don't take your time for getting the signal of a hard closure, let's say on the 4-hour, but you dial down on a 50-minute, 3-hour, 2-hour, whatever, then you can guess that it may do it because it seems likely, but you're not actually following the principle of that things are only self-contained within their own time frame. If you ask me, please correct me if I'm wrong, but that's basically always how it is for closures. So you don't actually get value if you go from 4-hour or 3-hour. On one, you have that little range trend,
Mm-hmm.
and on the other not. So you can't basically match those at this given situation, if you ask me. It's just
I
a
agree.
different trade, a different setup.
Yep.
Okay. So is that like what we talked about earlier, that when we had our daily range trend, you can get the 5-minute candles that close up and down each side of it. That doesn't mean anything.
Yeah, not for what you're looking at to get a signal from the daily, and same here. It's not interchangeable. So you look for a signal on the 3-hour, then you want the signal on the 3-hour, because they also don't share the same rollovers all the time, that makes it even worse. You could maybe argue a little bit more for 4-hour, 2-hour, 1-hour, because they have a lot more common denominators, but
Yeah.
the 3 and the 4-hour only share the 12-hour as a common denominator, and the daily, and so on.
Yeah.
So it's it's an edge case to say, yeah, okay, see, it worked out, or then the other time it doesn't work out,
I agree. Describing it like an edge case is a really good way to describe it. I wouldn't use those two together. They're too close.
So for you guys, trying to make sense of what's going on right now, what do you have on your charts, or what would you be looking for on your charts to prepare for an entry here? Either way.
I kind of heard Blue describe that he wasn't comfortable going long here at this point, and I agree with that. I'm waiting as well. I'm underwater on a long. That's just a coincidence. That's some background information for you, but it was a low risk failed move that price just blew down through. So now I'm playing defense and I'm not longing here. Like I'm not going to layer in here either for the same reasons that he's not going to start a new trade here. I would be waiting for some sort of pullback to more substantial support, such as a higher time frame hold or something like that. That's just where I'm at. So I'm just waiting. I'm waiting for my break even up around 179 to 180. Or I'm waiting for 147 to 153 to layer in further. So but that's just because I'm trading higher time frames, not trying to scalp right now. So that's
Yeah,
just
I
where I'm
agree.
at.
Shorting like 175 seems kind of obvious. That's also what I'm looking at right now. Hopefully we already do it today, and then I sweep it before the daily closure. Would be a
So
bit more
Blue,
easier, because then we don't have so many breakups, which are like bullish signals on themselves. But if we get like fast rejection back down before the daily closure, it makes it easier to hold onto a short I'm looking at here.
so you're looking for the rejection off of here, this kind of break and retest.
Yeah, at
type.
least to the trend line, or then maybe lose it even, and you have like easy stop loss chances in that area, because if it blasts through, then yeah. I mean, I use the RSI a lot for reasons, because only using these trends and hold levels doesn't help me to understand how strong price action is. They help me to build a framework around which price levels are interesting when we get breakouts and such. But yeah, I mean, it's personal preference. Everybody has to find their own tool set. But looking at the RSI levels, seeking out longs here is not smart, if you ask me. So yeah, that's just, you can scalp it. It may go higher anyways. It's just from, again, a risk return ratio, not something I would long here.
Yeah. Okay. Good. So does anyone have any more questions or anything does anyone want to share their chart and go through something they're working on?
Just before we change topics, if that's okay, let me go a bit higher time frames, Zach. So like if just back on the topic of like where suddenly trades start to become appealing, because we have a bit stronger resistance above, maybe a few members in the call would be looking for shorts up there, like Blue mentioned. Would it be as simple for some of you swing traders as setting those levels, and then you guys would just set alarms, and you're basically waiting to see those levels and how price responds, or would you be drawing something else as well?
Yeah, does someone want to to jump in on that one?
So the question is, would you be drawing structure and setting alerts and waiting for that stuff to kick in before trading it? Is that what you're asking?
Or I guess like before Zach was saying, what are the steps that everyone's going through to like essentially look for a trade? And so Blue pointed out it's not a great time to go long, and we're just in the middle. Like we can't go short. There's no trade there, which is accurate. So what would be say we weren't in a position, like what would be the next step where we'd say, I want to take a position. I want to look for shorts at 175 because that's a clear level that could provide resistance. Would you be drawing anything in addition to what we have? Like we have a downtrend, we could potentially draw a horizontal. Would we like I know Blue might have the VWAP like you mentioned. Anything else with the break and hold levels that we could add?
I would probably, if you know 175, like I actually haven't specifically looked at 175, but if you look at 175 as a target for a short, I would probably look at it across a bunch of different time frames, surrounding sort of the time frame and above that you want to trade on. And if you're confident enough in the move, or even more so if you think it's going to happen during the night when you're not awake or something, setting alerts isn't even like it's one step, but you could go further and just set a trigger buy order depending on what exchange you're using, or if you have that available. You can't do it. I don't think you can do it on Jupe. I used to use Jupe a lot, but I don't anymore. But if you're on a centralized exchange, there's usually trigger orders that don't tie up your capital. So you could find that if it's a hold level, like an engulfing fib move, if that's what you're doing, it just depends on your strategy, of course, but that's what I would be looking for. If you could find that, then you could decide how confident you are that they will rebound there. If you think there's reasons why price may push up into that hold, then you could further refine your entry to a greedy entry, Sindoc calls it, by dropping down in time frames and finding that exact same hold on a lower time frame. You can get a greedier entry that way. And again, it comes back to how much leverage you use. Whether you're high leverage or low leverage trading, it all makes a difference. So it's hard to like have an all encompassing answer for that. But I would kind of be looking for confluence across multiple time frames at 175 that short is going to work out. And as long as you have justification, like you should be able to explain why you think it is very high probability that it will work out. Yeah, and then if you're confident enough to answer, or sorry, to enter, then set up your trigger alert. That's one way to do it. Or you could just, there's a variety of ways you can do it. But I would also, just part of my own process, I would also be looking to determine what your fallback plan is. Like if that fails, okay, what are you going to do? And plan for failure. That is the absolute best way to, not the only way, but it's a very good way to increase your risk management, is have plans A through C before you even consider entering that short. Because if it goes wrong, you don't want to be thinking about how to fix it when it's gone wrong. You should already know pretty much where you're going to try to layer in to get yourself out. A lot of people don't agree with that. They say it's not the right way to do it, and I'm not going to endorse it one way or another. But there's a lot. Maybe I'm getting into too much detail, but there's a lot that would go into my head on how to take that trade. I'll just let somebody else continue unless you guys want me to keep yapping.
No, it's good because there goes a lot into it. I mean, drawing the holes and breaks, trends, range trend, etc., interior, exterior. These are really good, and how precise they are is pretty nice. But for me, it's too little to have a tool set to actually take a trade. Maybe for a scalp, because almost every time you hit a higher time frame, hold, break, or trend, you get an opposite reaction almost every time. But I miss the context of the whole market structure. That's and how volume came in over the whole time. That's where the VWAP bands are super useful since I found them because you get like strong picture about where is the volume averaging out over time throughout the whole chart in front of you, and where will you get most likely a lot of headwinds or support. Goes both ways. And then for the next context, it's again RSI divergence for me. An all-star doesn't get easier than that as per default. It's nothing fancy, but it's extremely effective to understand. I mean, let's be real, there's the reason why I came back for this $205 top, because everything was at resistance, monthly, weekly, daily, 4 hour, 15-minute. And that's when I was like, okay, not even I can just chill in my hiatus and do nothing. I come around and short this motherfucker, and then it went pretty much to 150s. And this is the kind of confluence I like more for trading, like trade fewer things with more conviction. If you have a lot of confluence at single price points that go together, then take those with serious money compared to like trying to squeeze every single time it moves up a bit or moves down a bit, because there's so much noise in the chart that tries to pull a reaction from you that usually on average in hindsight for most people is just like, why did I even trade the last 3 days? I've eaten a lot of stop losses or lost a bunch in fees or waited too long, whatever. Then you miss your trades, etc. And that usually comes with trying to overtrade and not actually having a lot of confluence at a single price point. So yeah, I can just recommend trying to find a tool set that helps you to find the price points at where it's extremely likely to get a reaction, and not trying to how you say it, not try to have a price now and then find the tools that give you like any confluence for a random trade just so that you take a trade, you know. That's not
Right,
Yeah,
like,
right.
that's a good point. Yeah.
because I can see now if I go into the 15-minute, that's overheated into bearish divergence. Yeah, I can short here just coming from that, you know. But if I take the whole picture, then it's maybe not the most ideal place to short right away. Maybe wait a bit more if it pumps, and then chances increase to be able to short there. So that's normal RSI, not RSI divergence. I don't like RSI or stochastic RSI personally, but yeah, exactly. So that's like you have a higher price, but a weaker peak on the RSI divergence. So that's a bearish divergence. You can short this technically if you look at that encapsulated without any other context, you know, then you can say, okay, I'm feeding my ape, I'm shorting right now. But yeah, I prefer more context and more confluence, because the 1 hour
And
has a bit more room, the 4 hour has a bit more room, etc.
when you're looking at the RSI, so obviously it's a measure of strength, right? It's taking a 14 candle range. And I think it's looking at the difference of the close of each candle to determine if it's getting stronger or weaker.
Yeah, so it's in layman's words, it's basically telling how much strength is behind price action or weakness. It goes both ways. So I may have used those words in chat if it's running out of steam when it's going up, you know. That's like what we are looking at, because the strength behind the price right now doesn't match the strength to the left. If you look at the peak to the left, just below the trend, to the left.
Oh, this one?
Yeah, this one. You see the RSI level is higher, but the
Yeah.
price is lower. So that's where the initial strength was. What we are doing now is, if you ask me, in confluence with all the other stuff around 175, is sneak those last stop losses away. I can be wrong here, but it like happens every single time, both ways, even if it's looking for a long in a bottom, or if you're looking for a short or an exit for your long now. You have the initial high, price gets dragged down. Now everybody gets confluential about shorting this. And then, as you can see, it's basically unnaturally bleeding up nonstop without any retracements. And that's most of the time, if you get then weakness in your RSI, bearish diverging, that's then rather more finite signal about, yeah, we are running out of steam because we are not having strengths in the price, because we would like to see a higher RSI level exceeding the prior peak. Then you would knew, okay, there's more power behind the price because it's like relatively strengths, not relatively strengths to the peak before, but the price is higher. So somehow in the order book, they are moving around the liquidity in that way that they can fish for those shorts and all those stop losses that are coming from the impression of the prior peak, you know. And that repeats over and over again. And if you have the same height on the RSI level across those quadruplets or triplets timeframes, then you have, yeah, that's, I mean, that's always the same. It goes always back to that. If you have at a single price point confluence on multiple timeframes, even if it's trends, range trends, hold or breaks, if you have a daily, a 4-hour, and a weekly that meet at a price point, then you have an extremely high success rate. That is the same also with RSI. If you find yourself on a 4-hour resistance, are overheated on the 15-minute with the bearish divergence like now, and on the hourly, it's questionable how much more room to run is there, since there's also bearish divergence. Then you can argue much better to short this than to look for longs, you know, or exit your long here. It's not always you have to wait for your SL to hit. It's totally fine to just take profits when things are pumping.
Yeah. Trying to avoid the urge to be greedy and hold it longer and longer,
Yeah,
and just take, since says take some off the table.
relatable.
Interesting. So with the RSI then, obviously we have a divergence here. How do you distinguish? Because obviously when we come up into this higher area on the RSI, that's showing, potentially showing strength. It's showing like, I guess, maximum strength of that range.
That's
So it's
maximum
you.
topping out area. So how you understand this, it's like an oscillator between 0 and 100. And most of the quality trades are for shorts if it's in the top area, because retracements are likely, and that goes with all time frames. And for longs in the bottom area. You wouldn't want to long this because it's already so high on all the shorter time frames. You would at least want to wait for a reset. And resets can happen while like consolidating sideways. That's you can have bullish consolidations because those RSI values also reset when you have like a piano pattern of candles going up and down, but never leave a top range. And that's also, yeah, works also the same on the bottom side if you're looking for longs.
Okay, interesting. So
And sorry, well, an important thing I add there is simply the liquidation maps, because why are they pushing the price that high? Why are they like, okay, now they are dumping it? Missed my entry by a few cents, but it is what it is. Why are they doing this? They want to create a reaction. They want more people to long. They want at the same time to fish for the shorts. That's when I have like the liquidation maps open all day, and then look, okay, what are their intentions? Okay, I see there's a lot of cake until 175. That's seemingly where everybody put their stop losses at after the prior peak, and then forming in short now that US tried to dump it today just to reverse it immediately. So precision goes really well also with the liquidation maps. And if you pull up one of those, and you can see yellow cake exactly to 175, and that's again then a high confluential data point adding to that 175 level. It improves your chances. Doesn't mean you will be right perfectly, but for me that's short worthy, or at least long TP worthy.
So, for example, here and with the RSI, are you using it on lower time frames or higher? Like how is like a 4-hour RSI too slow to adjust to the price, or how do you get a sweet spot for that?
No, all of them. That's what I said earlier. It's like the best quality trades go if you have. Maybe I shared my screen. That's probably easier. Sorry. Could have
Yeah,
done it
please.
earlier. So does it work? Maybe. Yeah. Can go up to 144 quality. So what we do have here is like have my could work with a bit more with layouts, but I have more a better workflow with if I keep my stuff like here Bitcoin and Solana drawings for 4-hour daily, weekly, monthly, and then flexible for on the get-go. So
it's for sorry,
we have
just for everyone listening, you can change the, if you don't know, you can just change the screen you're watching. Just go to the squares and click on Blue's watch his screen. Sorry, go on.
Yeah, no worries. So what we have here is like my drawings for the 4-hour time frame, the RSI levels, and a lot of those can come from like April 2025. It's like how do we draw trend lines on indicators? For me, just by experience, it's like a voting machine. Same if I don't know if you're with your friends in a car and deciding if you want to go to if you want to go to eat burger or sushi, and 3 vote burger and 1 vote sushi, then burger wins and everybody goes for burgers. So can have deviations and outliers, but most taps on those trend lines wins. So you see how the price gets usually strong reactions all the way coming from back here. So that's a strong global macro resistance basically on the 4-hour. So that's also why I'm like calling for caution to long this, because you're longing into 4-hour macro resistance at this single price instance. We already rejected once, fell below the other support trend. I mean, that's sooner or later deleted because eventually it runs out of the oscillator range and not support really anymore. It's then only resistance. But you have like this. And if we then go into the 1-hour, that's where I would use the flex chart, because that's where I draw in the get-go stuff. You can also see already, like it's all a probability game always. It can, I don't know, just do and blast right away. We're just talking probabilities like always. Same thing as on the 50 minutes before. You have like increasing price, but price strength behind the price is weakening. So that's a bearish divergence. Now keep that in mind with being in the 4-hour resistance, going to the 50-minute example. I mean, you covered it already, or we talked about it, but that's also, again, you get a higher price point, but you get a weaker strength in relation to the peak from before. So That's like a second confluence adding into the 4-hour where we are looking at like macro resistance right now, So we are just looking at this price. So this is not a point you want to long. Now, what's the counter argument? If we go to the daily time frame and to my daily drawings also, then you can see, if we zoom in a bit, we have this trend here coming from November 2024. So a lot of touches. Ding, 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 ding. You can always get a reaction. It even reacts as support before it kept falling down further after the Powell speech. And then after losing it and closing it below, he posted that in a chat. It was a very tiny and very nuanced closure, but it does matter because you can see we can zoom in really, really far. You can see like the RSI level only closed like slightly below that, but that's losing support. And then, yeah, it immediately followed through and fell on the next global resistance level, which is this trend line, and stopped right there. Obviously, it can wick through, only closures count. While it was running and the lowest price point was like this, that's where you can say, okay, maybe it will lose support, maybe not. But that's also, yeah, okay, I'm waiting for the closure. And then you can see it's closing right on top of that and gives us room to bounce back to this area, which is quite what's happening. So now is the question, what do you do about it? Because you have all this room left to go into like a daily resistance here, while actually being at like 4-hour resistance, 1-hour overheat, 15-minute overheat, etc. So usually what then happens, if price wants to follow through on the daily, just by experience, there are obviously exceptions, etc. We have two scenarios, like always. It just rejects right away because you look into it very nuanced. You can see also that this 4-hour is losing already steam because the price point is higher. This 4-hour is here. It closed at 172. And this 4-hour is here. We are currently at 173, 4, whatever. But the strength behind it is a bit lower. And that bows into this resistance, makes it simply more likely that we get some form of rejection here, like this. The counter argument would be, and that's where things get interesting, it's like it can like bounce around here and do the consolidation thing, That's when all the shorter time frames start to reset. But if you short this and it does that, then you are not losing a lot. It's not like you wouldn't be afraid that it's just blasting through, because it would probably take its time to reset those shorter time frames which are overheated. If you go back into the 50-minute bearish diverging, 1-hour bearish diverging, So the probability to long here, I mean, they exist from the daily alone, also from the weekly. If we go to the weekly time frame, my weekly chart, we have a lot of room here. We have like this giga macro resistance, which comes all the way from 2023. It held perfectly in that $205 high, closed right below, come back down, bounce off support, and gives room again to fly as high. But it's a weekly, you have a lot of 4 hours and dailies within a weekly. And although it's pointing up right now, it can perfectly, until Sunday, do this for whatever reason, not saying it will. It's just we have room for upside before you would short the weekly on this. We have room for upside on the daily. This is, by the way, not coincidentally, also 180 and 284. So that's like a relatively obvious short then for me. If we get for some reason all the way up to this. And how would we do that if we respect the RSI confluences? We want a breakout of this macro resistance and then get some form of retest in that area. And then you have all the space open here because nothing is on the way, just coming by that. What's in the way is the fact that it's high. It's overheated. I still wouldn't long this. I long this shit here. That's an area to long. All this is the stuff you want to long. Maybe in the middle if you're looking for scalps, if you have support and other confluence. But like serious money, absolutely no way I would put down serious money into a long here. Yeah. So that's as far as this goes. Mm, More looking
So
for
what?
shorts onwards from here, not saying it will just turn around right away. That's the point I'm trying to get at.
So in order for you to be looking for longs, this is a 4 hour. We're potentially looking at a couple of weeks maybe for the RSI to reset down at the bottom.
Yeah, to get that low, you can already see how rare it is. Even that exact level is even throughout the whole chart super rare reached, but it does it more often than not to get there. So if it does it from here, yeah, then sure you get some form like this. And then you are like in 1 week or whatever. Always depends also macro, you know how it is, can just accelerate. If we get the tweet now and it's super drastic and we are at resistance, yeah, then they will just use it to dump it faster than just bleeding down, It's always the same. But we are at resistance. So if there's something in favor of moving the market for whatever reason, then chances are not at pumping, chances are at dumping. So cautious for longs here. Manage your risk. You can long this, but then you should definitely have proper risk management if you are looking for something like that, Yeah, I mean, we also have these higher time frame horizontals. I don't even perfectly remember why they are there, but they are there for a reason. Also not a coincidence that it's 175. It's also the backside of these wicks, support resistance flip is also likely. Yeah, it goes on and on and on. So I don't know if it's annoying. Longing, looking for longs with serious money anywhere around here is, I don't know, not my risk profile.
We have a question for you. The Trading Parrot, I guess that's a site or a person, as a calculation where he gets a projected Bitcoin price based off of the projected RSI divergence.
Yeah, I have that indicator. I use it a lot. That's also
Okay.
where
Oh,
the
nice.
drawings, if you followed the chat or either from IA or FibLab, maybe it wasn't recognized as that, but it's this indicator basically here. So you can just input an RSI level. Let's say, let's just do it. So let me go to a clean chart. That's not so confusing for everybody with my millions of lines and reasons to take action. So if we go
So
to
you
daily,
do the similar thing for Solana.
they do that for all trades and assets nonstop to check where the price goes, and that's also when I post the charts. Maybe you've seen it if I do like a red circle here, and then this arrow goes all the way up here and just like
Oh,
this.
okay.
I post many of those. That's when I also use this indicator to say how much room has price to go until it hits at whatever resistance or support. So what was I about to draw out? I have this one here, I guess. This one. Second. Yeah, there you go. So if I hover with the mouse here, I can see, the levels as far as high where it's at. And if I would assume that how many days may it take until it runs there? maybe 1, maybe 2. It can do it today. What the fuck? But okay. But it's all around 59, 50, 60, maybe 59 if it takes longer, but around about 59.5 to hit in this area of this daily trend line. Oops. So what you can do is go into this indicator and put in that RSI level and activate it, and then it will draw you out the price with this line here of where price would be if we go from here with the current context of the running strength. That's important to say. If we go here and hit the 59.50 level, then you would get from here, oops, to this price point. And it also draws it next to your indicator. So that's again magically that famous 184 level, which gives a lot of confidence that if price goes there to get a stronger rejection, because that's the liquidity sweep, that's the daily resistance, that's when the 4-hour will be super overheated, etc., etc. Not sure about the weekly, but yeah, you can reverse engineer that RSI divergence with that indicator. It's free. You can, I don't know, just pick it up from the indicators.
Just remind everyone what that indicator is called if they want to have a look.
So
Reverse relative
that's
strength
this one.
indicator. Cheat country.
I just put it in the chat. So yeah, that's how you can put imaginary numbers from that oscillator into this RSI level setting. And if you show it, then it will tell you where price will be around when it's hitting there. And the important thing is you can see it's not always the same where the line goes, because that's in the context of that current price and price strength. So it's not like a flat line, like a horizontal right now. It's just as strength and price is moving. So yeah, in other words, prior history doesn't matter. You're only looking forward. Just ignore how it looks at the left, because it doesn't really matter if you're looking for a forward moving price point. So make assumptions of where price is likely to get a reaction or has room to run for. You can do the same for the weekly if you're just following through. No, I zoom in here, have like super high macro resistance coming from 2 major trend lines. I would expect a strong reaction here of some form. Same like here. You can argue, because it tested it already once, very close to the next test, that this one has a chance for the breakout. That's definitely something to argue for. But I would also then prefer like a breakout and a retest of some form, and not like trying to long here, no. But if we, what is that number now? That area? Yeah, 56, 50. I usually go only in dot 5 steps, not like, yeah, every dot 1 step or whatever. Yeah. So if we put that in here, then that would give us all the room. If you say we go straight from here to there, then you can see the line is currently sitting at 190 roundabout. So yeah, that's basically how this works. And if you manage and price manages to carry on and go that high, these are good reasons to either take profits for all those things hitting, or to consider shorting if in confluence with the other stuff. For example, you have like a large, is that still a range trend? Yeah, I guess so. hit that trend line and get the weekly resistance, then chances have it that you will reject here, right? So
Are you confident enough in that you can long up into that resistance point?
only if we get the retracement up front. I mean, I kind of said it twice. I think we get 180 plus before we get 144. That's how price is developing at the moment. But we will have more scalps in between, you know. I cannot say if we go first here or first here. Honestly, I don't know. Liquidity suggests we go lower. Rejection at the hold level here is perfectly likely. Not exactly there, but you know, take the liquidity sweep and then fuck over. This is perfectly likely, yeah. To be fair, I don't see us going mega blast through, but happy to be proven wrong. If more candles support that idea, for now, what we are looking at are resistances after resistances for the reasons mentioned. And if we get the retracement before without fishing all this stuff, then I will be super happy to long this, because then I know there's a lot of reasons to go here before considering real destruction, you know. And inversely was the same. If you followed the chat or conversations across the board, it was always like, if we don't sweep 144 or the 153 area, but go back up before, then one should be very happy to short anywhere from wherever it will stop into these targets, because they will happen. We are just waiting for when, not for if. So
Fascinating. I'm going to play around with that tomorrow, I think.
Mhm. So this is my basic tool set for a couple of years. VWAPs is newest. I perfectly sealed into my quiver. You know, it's like testing 5 things, throw 5 things away, testing 10 things, maybe hold on to one, and then see how it goes for improving profits and then risks management. And the newest thing is basically all this hold level, break level, range trend. Mostly, honestly, range trend and trend. So I'm playing around with that. Not feeling
You
confident about taking like super high amounts of money only based on those, but I like the confluence they add and the clarity, because they have a rule set. Just trying to understand it better for the everyday vocabulary personally, you know. It's just, I need obviously a bit more time for not getting confused on those range trends.
You
Sorry?
very quickly, I know we did it last week, but can you very quickly just show everyone how you're putting on that anchored VWAP? Just because I know if people don't know it, they'll go to the indicators and they'll search VWAP indicator, but how you're doing it is a bit different.
Yeah, no worries. I just got my flex chart. Move it all. So what you doing? No, I don't have to search, because I remember from the last time. So it's in the 5th submenu, where you also have like long positions, short positions, etc. You have volume-based indicators. You probably know from YouTubers these volume profiles, which also have existence license, let's say, but I don't use them a whole lot. But in the same area, it's the anchored VWAP, which you barely see. What you do with those, if you're looking at the whole chart, then you go very far back in time, and then you would anchor this right at the peak and right at the bottom where price bottomed out. Zoom in, because we are at the weekly now, but you want the highest candle as close as possible. So you would go to the 1 hour chart and then anchor it right at the highest candle, like this. I just don't zoom in right now, but the principle is the same. You zoom in, and for the lowest price point, it's the same. Would do it like that. Because it actually makes a difference. If you anchor it here, it's not the same as if you zoom into the 1 hour and it's somewhere here. So do that if you want to use it. So that's like the whole price history to get like points of interest where price is likely to resist or support. I have a very good example right here. See how many bounces are just coming from those. Probably in confluence with other stuff like probably the 50-week moving average. Yeah, that's also going across here, and then it's flying high, to all these shorts. But also, if you're losing those, then you see very strong reaction. So it's gone through here, but it was a running candle. It closed above again, and then it fucked over really. And I use them also nowadays because I have more conviction now after I use them only on higher time frames to use them on a more zoomed in time frames. So if we take the latest peak, for example, then you also get some form of confluence from it. If we go into the daily and take the latest peak and click that, and then the bottom. Huh? It was the drawing tool. So then you can also see when price is overheated, see how it rejected off of those. Could also see how if price goes there, you have a high likelihood of getting a short in or at best TP or longs. Again, in confluence with the weekly, daily, 4-hour, etc. RSIs being massively overheated or at resistance.
So, and your settings for that, are you using the VWAP and the first band or the second band or the third band?
It's the first and the second usually, and then it adds a zero line, I guess. Let me check. I don't play around with bands a lot anymore. Defaults are fine. I know per asset it's worth to fiddle a bit around to get better precision. But if you are very short into it, the default settings are perfectly fine. So if we delete this and go only with the latest peak and bottom, which is perfectly fair for scalping, that is probably super sufficient. Then you take this peak again, and then you take that low. Magically, that VWAP band is also again from the top hovering around the 180 area. So that's like another confluence for a scalp, at least to short this, in conjunction with all the other stuff. And you can see also how to trade those. Yeah, if you come from the bottom, I mean, it's just walking along that line eventually. And also if it's losing it, using it as resistance and support. I can also dial into it for the 5-minute. I didn't do that yet. Personally, I prefer still the higher time frame usage. I just see with more exercise and more trying, maybe play a bit with the multipliers around, that it could definitely be beneficial if you are really like Skyping a lot, but there's a reason I have it on the monthly to have like a huge picture of where the price is at and self-referential context on a very large time frame. And yes, we can see it. Yeah, for this top, that was also one reason. Sorry, it was also one reason why was like, yeah, okay, that pump is not sustainable. Not it was just the pump itself, and very, very pumpy by nature, but also all those bands didn't get retests really. It just kept blasting through, and then this was like, yeah, okay, that's all chart history, and we don't even get proper retests on those. I don't know about that. So wasn't sustainable for me. So again, Confluence. I have something coming up here, right at the 175 price point. Magically, number repeats all over and over again. Now, next band is at 184. Also a number that repeats over and over again. And that's basically how you're building Confluence into taking a trade, deciding for real money. I mean, if you take $100 position just for exercising, just to feed the ape or whatever, then yeah, then you don't need like 100 tools or Confluence points to try. But if you want to take real money and manage your risk, increase your chances, probabilities, then that's something I am personally using for sure.
Very nice. The VWAP. Good. So we've basically covered quite a lot of stuff today. I don't know how much longer you guys want to go on for, but I think we've already been on for about 2.5 hours. So I'll throw it open to anyone. Does anyone have any questions? Does anyone want to share a chart or share something they're working on? We've covered trends and range trends the best that we can today, and we had that great RSI and then the VWAP from Blue. So does anyone want to jump in and share something or any questions that we can go from? I'm not ever going to attempt to do any price predictions.
Nah, be open to both cases. That's the nature of the beast.
Nice. Maybe next time we'll get Sin in the live stream with us, and we can pick his brain to confirm some of our questions about the trends and stuff like that. And yeah, if you guys have any questions, you can throw them in the chat section, the live stream question section for next week. Yeah, does anyone have anything else they want to add?
Thanks a lot for the range trend, etc. Part. That helped me for sure. I have to go through the videos again and exercise it more. Still not in the vocabulary just fluently. And yeah, thanks for that.
Nice.
Wrap my head around those. The set indicator is still under construction. Are you willing to share that? Because that seems pretty cool. With where it's drawing out the range trends.
Yeah, Nathan, do you want to?
I shared it. Why don't I find that link?
Is
and
it
put it in the
published? Is
chat?
it public
Yeah,
yet, or is it a private one?
No, it's published. Let me see.
Oh, it
So
is
if you guys
already.
can see,
Sorry, I missed that.
you can see my screen. It's just called Range Trends. I think Nathan's going to share it in the chat.
I don't know how to use TradingView apparently.
I see. I already have Payrise. Sorry, I just forgot. Okay, great.
Yeah, and if anyone wants anything different, I can hit me up, and perhaps we can do something. Yeah, thanks for that presentation, Blue. That was awesome.
Yeah. So guys, just remember, this is going to show you the 2 candle range trends. So it's going to show you have a 2 candle range, and then you have the 2 candles each side. It's going to show you all of these ones, but you also have the left behind valley candle ranges as well. That's something that this indicator doesn't show you. But
That's right. Yeah, exactly.
Sin has a million videos on that. Well, not a million. I wish he did, but he has a ton of videos where he shows you range trends and stuff. So I think that's a valley one, isn't there? Just very quickly, I think that's one. You have that candle, and then it comes up to here, if I'm not mistaken. Someone said, "Oh, Flingwinger." Yeah, he said he's good with the TA stuff. I don't know if you can jump in there, Mr. Flingwinger, and just confirm if I've got that. This left behind candle range trend. We have the candle. We have the basically that level which has not been tested, and then we have a candle that comes up into the body, so we can draw our valley range trend.
Oh yeah, if you don't mind, how's the left behind? I heard that twice or thrice before, but it was a bit fast earlier. How do you define a left behind?
Yeah. Do you see this one here?
Can't launch your stream. Try again.
Oh, is it not sharing? I thought I was.
Yeah, 'cause
Not
for some
loading.
reason yeah, it wasn't loading for me either.
Yeah, maybe it's not. I don't know why it's not letting me share my screen. How bizarre.
Oh, weird.
I mean, I can share and maybe you can guide me through an example if you see one.
Yeah, I don't. I'm just trying to share. It just will not let me. So yeah, go for it.
Okay. Doesn't seem to load as well. Okay. Maybe we reached our daily ChatGPT credits or whatever.
Yeah, yours isn't loading up either. I don't think.
Okay, I don't know.
Maybe that's the universe telling us we've gone on too long.
Yeah.
Okay. What do you guys want to do? Should we call it a day and come back next week?
Yeah, sure.
Nice. Okay. Well, thanks everyone for joining. It's been an absolute pleasure, and like last week we've hopefully learned something.
Yeah, much appreciated for everybody joining, everyone.
Yeah, thanks everyone.
Art.
And yeah, Nathan, just to confirm, the range trend indicator is posted in the chat. Is that right?
Didn't post it yet, but yeah, I'll find it.
Nice. Great. Okay, guys, thank you so much. And yeah, remember we'll do same time next week. And if you have any questions, I mean, obviously you can just put them in the Discord. But if you have something specific for next week, there is a live stream questions Discord stream. I don't know what it's called. There's a page you can put your questions, and hopefully next week we'll get Sin in to join us as well, and we can pick his brain. Nice. All right, guys. Thank you so much.
Thank you
There
too.
we
Have
go.
a good one. Thanks.
Cheers.
Appreciate
All right.
it.
Ciao.
Bye, guys. Thank you. Ciao. Bye.